This man has this wonderful horse, and it's just a marvelous horse. It's got an easy gait and good looking and everything. It just works wonderfully, but also occasionally just gets so he's dangerous and vicious and causes enormous damage and trouble and breaks arms and legs for his rider and so on. And he goes to the vet and says, "What can I do about this horse?" And the vet says, "That's a very easy problem and I'm glad to help you." He says, "What should I do?" And the man says, "The next time your horse is behaving well, sell it." Well, think of how immoral that is. And haven't I just described what private equity has to do?
The late Charlie Munger was known not only for his legendary investment strategies such as inversion, but also for his wicked sense of humor. In this example that he just gave, Charlie pointed out the big problem with most private equity firms: dishonesty. These companies often wait for the once-in-a-blue moon, when a particular business is finally performing well, before selling it. As you can see, this is immoral and can cause a great deal of financial distress to the naive investor who decided to dip their toe in private equity. If you're an everyday investor who's thinking about getting into private equity, don't.
I would not get excited about so-called alternative investments. You can get all kinds of different figures, but there's probably at least $1 trillion committed to buying, in effect, buying businesses. And if you figure they're going to leverage them, 2 for 1 on that, you may have $3 trillion of buying power trying to buy businesses in the U.S. market may be something over 30 trillion now, but there's all kinds of businesses that aren't for sale in that thing. So the supply-demand situation for buying businesses privately and leveraging them up has changed dramatically from what it was 10 or 20 years ago. And I'm sure it doesn't happen with your Winnipeg operation, but we have seen a number of proposals from private equity funds where the returns are really not calculated in a manner that, they're not calculated in a manner that I would regard as honest. And so it's not something. If I were running a pension fund, I would be very careful about what was being offered to me.
According to Warren Buffett, there's a much more lucrative skill that you can learn instead.
If you have a choice in Wall Street between being a great analyst or being a great salesperson, the salesperson is the way to make it. If you can raise $10 billion in a fund and you get a 1.5% fee and you lock people up for 10 years, you and your children and your grandchildren will never have to do a thing if you are the dumbest investor in the world.
Remember Matthew McConaughey from The Wolf of Wall Street? The real money is made in cold hard commissions, not in trading or investing. And many private equity firms have figured this out. Why take the risk of the stock market when you can make a killing through guaranteed upfront fees?
It's not a fair fight, actually, usually when a bunch of public officials are listening to people who are motivated to, who really just get paid for raising the money. Everything else is gravy after that. If you run a fund and you get even 1%, of $1 billion, you're getting $10 million a year coming in, and if you've got the money locked up for a long time, it's a very one-sided deal. And I told the story of asking the guy one time in the past, why in the world can you ask for 2 and 20 when you really haven't got any kind of evidence that you are going to do better with the money than you do in the index fund? And he said, well, that's because I can't get 3 and 30.
I laughed when I first saw this clip of Buffett, but you know who isn't laughing? The people who trust the public officials to make smart decisions on their behalf. There have been cases, time and time again, where government and public officials responsible for managing large sums of money decided to try their hand at private equity only to lose everything.
In the case of private equity, often, they don't take the money, but you pay a fee on the money that you've committed. And of course, you really have to have that money to come up with it at any time. And of course, it makes their return look better if you sit there for a long time and treasury bills, which you have to hold because they can call you up and demand the money, and they don't count that. They count it in terms of getting a fee on it, but they don't count it in terms of what the so-called internal rate of return is. It's not as good as it looks, and I really do think that when you have a group sitting as a state pension fund,
Warren, all they're doing is lying a little bit to make the money come in.
well, that sums it up.
If you're looking to invest your money for the long term, and you don't want to gamble with private equity, I might have just the thing for you. I recently started using a stock picking service that gives high-quality stock recommendations for the long term. They offer a $1 trial for 30 days, but I can do even better. To give you a taste of what it's like, I'll send you one of their recent stock picking newsletters for free. Just click the link in the description and I'll send it right away.